Hi there, good morning, and you've tuned in to ET Now, and this is Buy Now Sell Now with me, Cheryl D'Souza. Along with me, I'll have Shrishti Sharma joining in very shortly. But take a look at what the markets are doing at this point in time, because it is looking like a good day, transpiring to be a better day, in fact, because we started pretty flat for the benchmark indices. Now at the day's highest point, talking about the Nifty for you, 100 points uptick coming in for the Nifty, and hopefully today we should be able to hit that coveted 25,000 mark on the benchmark indices. Well, let's take a look at what Nifty Bank is doing, because a tad bit of outperformance coming in from Nifty Bank when you compare it with the benchmark indices is seeing an uptick of about 0.5% or so. You have the advanced decline tilted in the favor of the gainers right now. Talking about the list of gainers, then you have BPCL that's ruling the charts and by a margin, 5% uptick coming in from BPCL as we speak, followed by Power Grid, NTPC, Tata Motors, as well as Coal India are the other set of gainers in trade today. While we have Ultratech, Hindalco, SBI Life, LTI Mindtree, as well as Cipla on the losing end of the markets. Talking about the sectoral indices, then it's mostly a sea of green coming in for the sectors, apart from the IT index, which is trading flat with a negative bias. Ditto coming in for the metal index, that one is trading flat with a negative bias. But both of these counters, if you look at the chart on your screen, they are trying to claw back and actually nudge that positive territory. So all in all, picture perfect scene coming in for the sectoral indices, with the energy, oil and gas, realty, all of them seeing good up move, and also the broader markets outperforming the benchmark indices. So that's the way how the markets are looking like at this point in time. Shrishti, definitely with the colors that we are wearing, we are making the markets and the market participant gauge which side of the market will tilt. Will it be the side of Shrishti or will it be the side of Cheryl, isn't it?
The markets are giving both side moves, Cheryl, as we are seeing very volatile. Good morning to you, and indeed interesting moves coming on the markets, and let's wait and see that if today we get to see that 25,000 mark or not. But indeed a good recovery from the day's lowest point. But with this, viewers, let's move on to the Buy Now Sell Now show, and let's get started with all your stock related queries. Just take a note that you can connect with us live on a WhatsApp number that will be continuously flashing on the top of your screen, or you can also write to us on our social media pages, that is X, as well as on our Facebook pages of ET Now, and we'll try to take as many queries as possible. So let's get started then, and we have two of our very special guests joining us today. On the technical side, we have Dhwani Patel with us, and to guide us fundamentally, Rajesh Agrawal is with us. A very good morning to both of you, and thank you so much for your time. Let me kickstart taking the first query. This one is coming in on IOC, and Dhwani, I'll take it from you because this one is coming from Tina, and she is holding IOC. Her buy price is 175 rupees. She wants to know, can she add more at current market price? Her holding period is for the next 12 to 18 months.
Good morning to everyone. Talking about IOC over here, chartically, definitely the stock has given a breakout. 180 seems to be a resistance for this particular counter, but in today's session, we see that the stock is soaring high above the same levels. Of course, I would not suggest to enter in further on this particular counter, as I'm looking up at another resistance coming in over here around 193 to 194 levels. In my suggestion, she can hold on to current position that is there, and keep a stop loss on the lower side at 178 and hold for the target of 194.
All right, so that's the take coming in on that particular counter. But Rajesh, also we have Rajesh on the show. A very good morning to you, Rajesh. And Rajesh, we have a lot of viewer queries actually pouring in when you talk about what is exactly happening with the stock of Paytm, because that one has been in news of late. You saw late last week, you had some sort of a news development coming on that particular front, though it has to be confirmed by the company as well, and also to get a confirmation from actual notification on that particular front. But Paytm, what's your take on that one? Do you think fundamentally it's reached a region where someone can go ahead and look at a fresh buy in this one?
I don't think so. Firstly, good morning, everybody. I don't think
got you on a patchy line actually. Yes, we cannot hear you. We'll just try and fix that line with you and then we'll come back to get your view, especially when it comes on Paytm. But let me take the question to you then, Dhwani. What's your take coming in on Paytm? Because that move from the 420.30 to above 500 levels right now has been pretty swift as well, and this sort of a level coming in for Paytm has been something that viewers or the market participants have not witnessed for a while.
Of course, the chartical structure has definitely taken a reversal over here, but then also the point needless to be noted over here is that on a daily chart, when we're looking up at a 200 EMA, the stock since last 3 sessions has not been able to cross above it. 515 seems to be a likely resistance on this particular counter on the short-term basis. Given that we crossed that, there's a gap that Paytm had left with a gap down opening. We see a supply zone coming around 528 levels. So given 515, 528 cross, we see further momentum building up. But till that time, I do not see any fresh positions to be taken up. Ones who are already holding it can trail their stop losses to 485.
Rajesh, in case if we have you back, what's your view coming in on Paytm then?
See, I would not suggest going long on a Paytm for an investment perspective as such, because whatever the news flow may be, but the fact remains the company is into losses. And the losses are mounting day by day. And we have seen a lot of large investors or angel investors selling the stake at losses. And I don't find any reason to believe that in the near future, in the very near future, there would be some change of fundamentals in the counter as such. So it would be better to avoid this counter.
All right, that's an avoid coming in from Rajesh, but let's move on and let's get the next query, and this one is coming in on Hindustan Oil Exploration. And Rajesh, if you can advise Raji from Mumbai on this one, because he's already holding 1,000 shares, his buy price is 180 rupees. What to do in this particular stock and in the next 12 months, what to expect out of this?
See, one can continue to hold at this point of time. We believe that it has a potential to touch around 300 odd rupees in the next 6 to 9 months. The numbers have started improving. I won't say it has been good, but it has started improving from what there was in the last 2-3 quarters. The last quarter numbers were better than before. And we think that with the kind of drilling and all going on, the change of management, the company is going to do well going forward. So keep a target of 300 and continue to.
All right, this next one is coming in from Sastamani. This one is, he's writing to us from Coimbatore. Has 220 shares of Vellore Estates bought at the levels of 229 rupees per share. Any sort of a target that you have for this particular counter for the short term, that is 6 months to actually 1 year? What's your take on this one, Dhwani?
No, I'm sorry, I'm not tracking this.
Vellore Estates erstwhile was DB Realty. You're tracking DB Realty? Did you track that chart by any chance?
Yeah. DB Realty, of course, we're talking about it chartly. Then I don't see much of upside in this particular counter. The stock is near a resistance. So in my suggestion, it would be wiseful enough to exit the position right now.
Okay, moving on to the next query then, and the next query that I have is coming in. This one is. Okay, this query is coming in from Shankar from Delhi. He's a short-term investor. Dhwani, he wants your advice on RVNL and NBCC. He's having good profits in both of these. Good time to book out profits or continue to hold on RVNL as well as NBCC?
NBCC, definitely yes. The stock has shown in the short term resistance around 197 odd levels, and currently we are near the same level. So in my suggestion, NBCC is a good time to book in your profits around 190 to 193 levels. Talking about RVNL, we definitely see that the railway counters in the past few sessions have been moving on the higher side. RVNL definitely should be hold on to for the current level as well. Fresh positions are also recommended in this particular counter, as 20 EMA is acting out as a good support. The stock has taken a bounce from that. A breakout given on the higher side above 650 levels. We'll see further momentum building up on this particular counter. So trail your stop loss, keep it up on the lower side around over here at 575 and hold on to RVNL. NBCC is an exit.
All right, so those are the recommendations coming in from Dhwani on the counters. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll try and take up more of your queries, as well as we have a management joining in. So don't go anywhere.
Welcome back, and let's shift focus to Indian Bank then. The company did report its numbers this time, where the advances have seen a jump, the deposits have seen a jump too, but it's the NIMs that have seen a decline of 12 basis points on a sequential basis. But let's understand more from the management itself. We have been joined by Mr. Shantilal Jain, MD and CEO of Indian Bank. Very good morning, Mr. Lal, and thank you so much for your time. Let me just start by asking on your numbers and especially your profits, which have seen a growth of 40%, but this was largely led by lower provisionings this particular quarter. If I see your slippage ratio, then that is also low on a YOY basis, but overall NPAs are at a multi-period low. Will the same level of asset quality continue going ahead as well? And what's your take on that?
So our net profit has grown by 41%, from 1,709 to 2,403. The net profit has grown on the strength of the growth in operating profit, which has grown by 8%. And operating profit has grown on the strength of the NII, net interest income, which also has grown by 8 to 9%. Non-interest income too has grown by 11%. So, and that both these net interest income is growing based on our business growth and maintaining CASA. So this profit is coming from the core operations. The profitability will continue to happen. Now the point is the gross NPA and the net NPA and the asset quality. So our collection efficiency, we are maintaining 95%. And as far as slippage and recovery is concerned, our story for recovery more than the slippage is continuing. And third point is when the net NPA itself is 0.39, so the credit cost will come down. So going forward, when your businesses is growing, CASA is growing, asset quality is in better hands, so now the profitability should be better.
Good morning, Mr. Jain. This is Cheryl also joining in the conversation. And Indian Bank's actually given a target for NIMs of approximately 3.4 to 3.5%. There is a pressure on NIMs when you talk about the entire banking system as a whole, isn't it? So although it's still within the limits, do you foresee any further compression in NIMs in the near term, given the trend or the commentary that we are seeing in the banking industry?
At the beginning of the year, we said that margins will be 3.4 to 3.5, of course, with a plus minus 10-15%. In the current quarter, our margin, we would be able to maintain our margin at 3.53%. Going forward, of course, we are living in a very tight market, where for a growth of the business, naturally you need to raise resources in the shape of term deposit. And so margins may not be on the same range going forward, but our endeavor will always be to remain within our range, which we are given 3.4 to 3.5. And naturally, we always perform better than the guidance.
Also, Mr. Lal, you reported healthy advances growth. The CD ratio went up, but although it's still in the comfortable levels, but now that the regulators have become vocal about the concerns around this, so do you anticipate your CD ratio to go up?
So the point is that you see our CD ratio is 79%. And you see from last 1 year, or even you see March, our deposit and credit growth is matching. In fact, in terms of absolute number, we have grown by 60,000 crore both in deposit and advance. Of course, since the incremental CD ratio is 100%, so naturally your CD ratio is inching up. But as far as liquidity is concerned, we maintain the liquidity. We have a 43,000 crore of excess SLR. So we will raise deposits based on the need. And in this process, 1 or 2% here and there, LDR can happen.
Right. Mr. Jain, what's your internal assessment on the latest RBI's draft guidelines on the liquidity coverage ratio? If you could tell us any impact that you've assessed so far on the LCR ratios going ahead?
So this draft guidelines have come for LCR. 2 point is the runoff factor has increased by 5 bips, right? And as a result, naturally, your outflow will be more in that situations. And at the same time, on a HQLA side, also the 5 discounting factor is to be factored in. Resulting the current situation, we will be having impact of around 5%. Presently, we are at a LCR of close to 120%. So it will have an impact of 5% in our book. And of course, it is still, we are at 115%. So we are managing our liquidity.
But also, Mr. Lal, you managed to maintain your ROA above 1% for the second consecutive quarter now. So can we expect this to remain above 1% in the coming quarters as well? And if so, then what are the levers to drive your ROA growth further?
So at the beginning of the year, we said that ROA will be more than 1%. You see the last quarter, it is 1.15 and this quarter is 1.20. When the credit cost is controlled, slippage or recovery is more than the slippage, naturally the ROA and our businesses are growing with the margins. So ROA is, we are saying that we'll continue to have our guidance of more than 1% ROA in going forward as well.
Right. Let's talk about MFI segment. Are you seeing any stress building up in the MFI book, Mr. Jain? Because we've actually been hearing about this from some of the banking peers.
No, you see our slippage is around 1,900 crore of slippage we have seen. Out of this, around 900 crore is an MSME book and 600 crore is on a agri book and 400 crore in a retail book. So there are 2-3 reasons for that. First, out of 1,900 crore, post 30th June, we recovered around 300 odd crores. Second point is that in the first quarter, you see that the seasonality is also involved here. Second one, heat waves, election, all these things are factored in. Therefore, there is a slightly higher slippage and we are recovering this. But we do not have much of a concern because we are maintaining the collection efficiency of 95%, or in SMA1 and SMA2, which was 0.48% in 31st March, has now come down to 0.47%.
All right, so we leave it there, Mr. Jain. Thank you so much for joining us on ET Now, actually, to talk about the earnings for Indian Bank, the outlook that you have for the NIMs, as well as you spoke about the LCR norms as well. Thank you so much for joining us on ET Now this morning. But viewers, let's continue taking all of his stock-related queries then. And this next query is coming in from Balan, and he wants to know about Bandhan Bank, which he's already been holding from the levels of 190 rupees per share. He has LIC from the levels of about 900 rupees per share. Should he hold, add or exit and instead look to buy NTPC? I'll actually take this query to you, Rajesh, given the fact that Bandhan Bank, LIC, Bandhan Bank level of 190, LIC 900. Do you think makes sense for our viewer to stay put with both of these counters or either of the counter and also make that switch to NTPC by any chance?
On the contrary, I would say both are add from our side. Bandhan Bank numbers were pretty good. Number of branches are very high. They are doing very well. Whatever concerns were there have already been discounted in the valuation. If I'm not wrong, it has fallen from the highs of almost 700 odd rupees to trading at around 220 odd rupees now. There is a lot of scope to go up, maybe to 70 odd rupees in the next 1 year is quite possible. And as far as the LIC is concerned, it's one of the best plays in insurance sector, I would say. With around 60% odd market share, launching new products, doing very well. The AUM is larger than the combined AUM of the entire mutual fund industry, I would say. So it's better to add. Both are add from our side, and somebody holding can continue to hold.
That's a hold coming in on both of these counters. But moving on, and Rajesh, let me once again come to you because this query is coming from John, and John has been holding India Cements for more than 10 years now. Though his buy price he didn't mention, but he's holding 200 shares of this particular stock. And as we all know that just recently, you can also see on the charts, just 3 months and the stock is up almost 66%. What to do in this particular stock after the phenomenal run-up? Good time to move out, book some profits here and look to re-enter in sometime in future?
Of course, that would be a better strategy because open offer, if triggered, would be around 390 odd rupees, and there is not much of a space left between the current market price and the open offer price. So maximum it can go to 390 in the short term, I would say. So it's better to book some profit at this point of time, maybe re-enter after it falls to, after the open offer, if it falls to around 330, 340 odd rupees. Otherwise, there are better choices available in the cement space, maybe a Birla Power for a Dalmia Bharat, even Grasim, which is a holding company of Ultratech, would be a better choice than what India Cement is.
This next query is coming from Vishal. He's writing to us from Dubai and he wants to know about Tanla platforms. He wants fundamental as well as technical query on this one. Holding from the levels of about 1,100 rupees per share, as well as Keval Kiran, which is holding at the levels of 710 rupees per share. Good time to average or hold these. Let me take a fundamental query on Tanla platforms from you, Rajesh, and then both the queries I will take on the technicals from Dhwani. What's your take coming in on Tanla platforms? How does this one look? Because the average price is not that much compared to what most of them have purchased, is 1,100.
I think one can hold at this point of time because market is also in a momentum. We are waiting for the results also. The last quarter result was not that good, but still we believe that going forward in the next 2-3 quarters, there might be some improvement in the numbers. A target of 1,050 would be a decent level to expect. And at that, if it touches 1,050, at that point of time, one should book out.
All right, coming to you then, Dhwani, what's your take coming in on Tanla platform as well as Keval Kiran on the charts? How do both of these counters look? Just to recap for you, the Tanla platform's average buy price was 1,100. Keval Kiran was 710.
Talking about Tanla over here, particularly, definitely the stock has made a bottom technically over here. On the short-term chart, I do see that 940 to 920 level is acting out as a support zone over here. And on the higher side, we'll see certain resistance coming in around 1120 levels. So definitely it's a buy coming in from this particular level as well. Keep a stop loss on the lower side at 920. On the higher side, given 1120 crosses over here, we'll see further a marginal upside till 1215 levels as well in Tanla. Overall, the stock is positive, maintaining its trajectory on the higher side on short-term charts.
All right, moving to the next query then, and this one is coming from Hamsa. And Dhwani, if you can advise Hamsa on NTPC, she is already holding over 1,300 shares, buy price is 247 rupees. She's a long-term investor but wants to know, can she go ahead and buy more at current market price?
The stock has already rallied. We've seen a phenomenal rise on this particular counter. Given on the lower side, in 2020s, we had seen somewhere around 80 to 85 levels, if I'm not wrong. And from there, we are already at 5x right now of the valuation. And looking at the overall structure also, we are definitely on the bullish side over here. But technically, I do see that on short-term basis, around 420 to 425 levels would work out as a resistance given the option data that is speaking over here. So in my suggestion, 420 to 425 would be an ideal level to book profits into this particular counter. No fresh entry suggested here.
All right, so that's the take coming in on that stock. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries. This one's come from Venkat Gala, who's writing to us, who's writing to us from Hyderabad. And he's purchased about 1 lakh shares of IRFC at a price of 23 rupees per share. He's managed to sell about 15,000 of that, and he's taken out his capital. Is it wise to sell some more and look to buy IOC from a long-term perspective? And which share will build up long-term wealth? The fact that he's used the word long-term, he's used the word wealth, which means that this query has to come to you, Rajesh, isn't it? What's your take coming in? IRFC 1 lakh shares managed to book out rather take out his capital in this particular counter. And now he's wanting to sell some more instead by IOC. Do you think it makes sense?
Profit out of IRFC at this point of time would be a very sensible thing to do. At least 20% of the remaining holding, what you are holding, must be booked at this point of time because one, you are sitting at a good amount of profit. Two, it has run up quite a lot ahead of its fundamentals. So the numbers have been good, doing well, the model is good, but everything said and done, valuations are stretched. So book some profit over it. As far as buying IOC, I think it can be a good strategy because going forward with the kind of numbers that they are going to report, although HPCL has reported a very bad number yesterday, but still we believe that in the long run, these companies can give good returns because one, they give good dividend. Two, they are trading at a lot of discount to the intrinsic value, despite the fact that they have run up quite a lot in the last 1 year or so. IOC can be bought. Apart from that, there are a number of counters which can be bought at this point of time. One can have a look at chemical sector as such, where one can invest some amount of money.
All right, moving on to the next query then, and Dhwani, this one is from Nikhil, and he's an intraday trader holding shares of Tata Motors. Buy price is 1150 rupees. Can he go ahead and book out the profit at this point in time, or continue to hold on since the earnings are also due tomorrow, but the stock has been on the up move? What will be your advice?
Absolutely. Looking at the levels he's bought, it's a day trade today that he's got into. I definitely see that the stock has given a good run up from his buy levels, and given that there is an event tomorrow, I would suggest him to book profits in this particular counter. Look around 1172 to 75 levels currently where it's trading at, to book in your profits and take it home.
All right, this one is coming from Reema, who's writing to us from Mumbai and wants to know if it's the right time to enter India Cements for the longer term. We've got the huge corporate action that's taking place in this counter. Rajesh, given the fact that you now have Ultratech Cement first buying a part stake, now looking to buy more, in fact going ahead with an open offer, taking that control of India Cements. Do you think for the long term it makes sense, because they've categorically stated they will make sure that India Cements remains as a listed entity?
As I said earlier, India Cement would not be a good idea to buy at this point of time, because there is not much of a difference between the open offer that's maybe around 390 odd rupees, and currently it's trading at 372 rupees. So it's only 15-18 rupees of a difference, which doesn't make any sense for a long-term investor at this point of time. Maybe at levels of 330, 340 odd levels would be a better levels to watch out. Look for some other cement counters, maybe a Dalmia Bharat build-up or Grasim would be a better bet rather than going for India Cement. Even if you can, wish, you can buy Ultratech, which is the acquirer company of India Cement.
All right then, moving on to the next query, and this one is coming in from Akshay, and Rajesh, he's holding SBI Cards 200 shares, but at a 15% loss right now. Should he book out this particular loss currently and move to Poonawalla FinCorp, or stay invested in SBI Cards itself?
Poonawalla FinCorp will be any day a better choice when compared to SBI Card. So, despite the card spends been going up, the numbers have not been that good, and I don't think any improvement in fundamentals are going to happen in the near future. So it's better to switch to Poonawalla Finance for a longer term horizon. I would suggest only if you're ready to hold for 2-3 years, then go for Poonawalla Finance. That's a very good company, giving good numbers. Almost every quarter we have witnessed growth in the last 4-5 quarters. The AUM has increased and IMs have increased. Asset quality has been good. Poonawalla Finance is a better choice.
All right, let me take the next query then. Poonawalla is indeed a better choice amongst both of these names. But the next query that I have is coming in from a viewer named Anjali from Nasik. And Dhwani, what's your advice on L&T Finance? She bought the shares at a price of 100 rupees. What to do in this one, book or hold?
Absolutely. The counter definitely has been into a sideways zone right now. Around 180 to 85 is where we are seeing the short-term resistance coming in. But definitely one can hold on to it, because the support level also on the lower side is quite intact. Given 174 level holds out in this particular counter, we'll see further rally coming in on the higher side. So in my suggestion, 174 is the ideal stop loss that one has to keep it on the short-term basis over here. On the higher side, she can look forward to targets of 194 to 195, which were previous swing highs.
All right, let's just take a quick detour from the queries then. And New India Assurance is set to hike premiums by about 10% on 9 of the health insurance products starting November 1st. And this move comes as the response to rising loss ratios and the new IRDAI regulations. There are news Also, the other insurance companies also will be planning similar hikes. My colleague Anurag Shah is here with more details. Anurag?
So going ahead, all of us are going to pay more for our health insurance premium because across the industry, companies are planning to increase the premium, and the market leader, New India Assurance, has all set to increase premium for their 9 products effective from 1st of November. So now New India has started to send the notices for renewals because from 1st of November their 9 products will have a hike of 10%. So 9 products are the Arogya Sanjeevani, which is a standard health insurance product, New India Premier Mediclaim, Jan Arogya Bima Policy, Janta Mediclaim Policy, Senior Citizen Mediclaim Policy, New India 60 Plus Mediclaim Policy, New India Top Up Mediclaim Policy, Universal Health Insurance Policy, and New India Asha Kiran Policy. These are the 9 policies in which New India is set to increase the premium by 10%. There are 3 other policies also, New India Mediclaim, New India Family Floater, and a Yuva Bharat policy. In these 3 policies, there is no hike happening. As per our sources, other insurance players are also set to increase premium going ahead from August, September. Main reason for increase in health insurance premium, one is the loss ratios in particular product, and another one is the new health regulations of IRDA, which got effective from April 2024. So in the new health regulation, the moratorium period has been reduced from 8 years to 5 years, and the waiting period also got reduced from 48 months to 36 months. So these things, and considering the medical inflation also, so all these things has made companies to increase the health insurance premiums. If we talk about the New India Assurance, and New India Assurance is the market leader in overall non-life insurance industry also, and in a health insurance also. So of a total health insurance premium, 18% is covered by the New India Assurance, and of New India Insurance only, of their total premium, 53% is through health segment only.
All right, so that's the 18 Hour exclusive news coming in on New India Assurance. Do look out for this. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now. Let's keep it going with all your stock-related queries then. And the next query that I have is coming in from Rajeshwari. Okay, Rajeshwari has a very micro-cap company on her radar, so we might have to skip that. But moving on to the next query then, and this one is coming from Hemant. And Rajesh, let me take it from you. Policy Bazaar, what's your view on this particular stock? He's been holding the stock from around 900 levels. What to do in this one? Good time to book some profits out here or continue to hold on?
Book partial profit, although the numbers have been started improving in the recent past, and going forward with the kind of awareness about insurance and all these products, I think this company is going to do well. But at this point of time, partial profit booking is suggested. If it falls to around 1300 odd rupees after some time, then again buy. But at this point of time, at least book partial.
Next query is coming from Kumar. He is holding about 350 shares of IEX at the levels of about 183 rupees per share. He wants a short-term target for this one. Dhwani, any targets that you have for IEX in mind right now?
Absolutely. IEX definitely looks over here on the bullish side. Overall, the derivative data is suggesting in this particular month, we'll see around 200 levels coming in on this particular counter. There is a lot of long built up that we see over here as well. So in my suggestion, hold on to it. You can book your profits around 200 levels, and on the shorter side, you can maintain a stop loss around 184 levels.
All right. Dhwani, I'm once again coming to you. This query is on Piramal Enterprise. The stock has been on the up move, and Gayatri has been holding the stock for the past 2 years. What to do in this one? Continue to hold on or look to move out?
Talking about a period of 2 years over here, I don't see that she has made much of gains over here, because since 2022, the stock has been trading around 1100 odd levels as well. In my suggestion, One can also look up at if holding, she could book around profits at 1120 levels. Till that, we'll see a bounce coming in from the current levels. As on short-term basis, the stock has definitely given a breakout about 980 levels where it was forming a resistance earlier. So I don't see that much of money can be made over here above the 1100 levels, 1120 marks. So she can book in profits at that point in time. As of now, hold on.
This one's coming from Manoj, who's writing to us from Pune. He has 300 shares of Rupa and Company. Purchase price was 240 rupees per share. He bought in October 2023. He wants to know, makes sense to stay put with this one or buy some more? What's your take, Rajesh, coming in Rupa and Co? What's your analysis on this one? Makes sense to buy some more at these levels? He's sitting on a good profit.
One can add some at this point of time. The entire hosiery pack has started giving turnaround numbers, be it large, be it Rupa or dollar. As far as the Rupa is concerned, I think it's trading at a huge discount to its valuation, one-time price to book 10 or 12 times earnings. I think can give a good upside from here with good brands and right belts around good market share. A decent target would be 400 odd rupees in the next 1 year.
All right. The next query that I have is coming in on PNB Housing Finance. And Rajesh, if you can guide Subrata Mukherjee from Kolkata on this one. This was one of the stocks in focus today as well. But is it a good stock to enter afresh?
Entering fresh would be a little risky at this point of time. Maybe 700 odd rupees would be a better levels to enter into it. The company has got, the numbers have been improving, it's doing very well. I mean, the government's focus in the housing sector as such, I think housing finance company as a pack would do well. But at this point of time in the entire pack, I think LIC Housing Finance is on a better valuation than PNB Housing. PNB Housing, it falls to around 680, 700 odd levels would be a good buy.
Let's kickstart with the rapid fire then. And the first query that's coming in from is Ganesh. He wants to know about Premier Explosives 50 shares at a price of 849 rupees per share. Wants to know that what should he do with this company? Should he continue to hold on? Dhwani, the stock has seen a sharp downtick. What should he do?
I'm sorry, I'm not talking this particular one, so I won't be able to comment.
All right.
All right, Rajesh, what's your view on Patel Engineering? Praveen is already holding 500 shares. He didn't share his buy price, but for the next 6 months to 9 months period, what to expect?
Add if you have funds, add.
All right, this one is coming in from our viewer Anil Malhotra. Mankind Pharma is the counter, about 450 shares at a price of 1,148 rupees per share. Should he keep it for 1 more month, or what sort of a target should he keep in mind, Dhwani?
Book in over here, the stock will see further downside in this particular levels.
All right, Rajesh, Subhadra is holding 53 shares of GMM Pfaudler, wants a very long-term view on this particular stock. Her buy price is 1562 rupees. What to do next?
Try to exit out upsides.
Krish wants to know about Trent. Rajesh, he's holding Trent 75 shares at a price of 4,100 rupees per share. He wants to know whether it's good to hold for the next 3 years. Despite the stock has seen some bouts of correction. What's the take?
Continue to hold. There might be some correction, but long term is good.
All right, Rajesh, what's your view coming in on Quest Corp? Because Karthik has been holding the stock for the past 2 years, still at a loss. What to do next?
It's a hold from a side, even an add if somebody has liquid cash with them. One can even invest this. The numbers have been good this quarter.
All right, this one is coming from Jay. KPIT Tech is the company. Dhwani, 300 shares at a price of 1,850 rupees per share. He's holding this for the long term. Can he look to average right now?
Yes, absolutely. One can average. The stock is near a polarity point, so averaging would be a good idea.
And Dhwani, lastly, if I can have your take on Syngene, because Rajeshwari has purchased 50 shares, buy price 792. What to expect in the short term?
Absolutely. The counter is doing definitely well. Hold on to it. You'll see further upsides coming in on this one.
All right, with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Dhwani, as well as Rajesh, for joining us on the show and actually resolving as many queries as we were able to squeeze in this hour. But on that note, viewers, we are totally out of time on this edition of By Nasser. It's a goodbye from Shrishti, myself, and the team that put the show together. So stay tuned. Markets at noon coming up next.